As an expat, what are your tax obligations in Canada versus what you pay in the country where you reside? Many governments around the world sign treaties, some do not. If you make income in one jurisdiction but reside in another, it's enough to make your head spin. Today in the Canadian Expat, we ask some of your questions to the global tax professionals of Trowbridge Professional Corporation. The phrase, "nothing is certain except death and taxes," has been uttered since Christopher Bullock wrote The Cobbler of Preston in 1716. As it turns out, tax is not quite that certain and carries with it a great deal of complexity, especially when you begin to look at it from an international perspective. Last week, we sent an email to our newsletter subscribers asking people who had tax questions to submit one to us so that we can get an answer from Trowbridge. The response was amazing. We received hundreds of questions. Some were brief and others were really complex and very specific. And we'd love to answer all the questions that you submitted, but that would just not be possible. So together with Trowbridge, we whittled down the list to questions that we believe have the broadest application. There are still lots of questions to answer, so we are breaking this up into a bit of a series. Make sure that you subscribe and hit that little bell so that you get notification when a new video is published. So let's get started. It gives me great pleasure to welcome Ernie Nagratha, one of the partners with Trowbridge Professional Corporation. Ernie, welcome to the Canadian Expat.
Thank you, Alan, for having me.
You know, I've got to say this. About 13 years ago, when we first conceived of the idea of starting the Canadian Expat, a platform to help Canadians around the world, one of the first calls I made was to Trowbridge, and Ernie picked up the call. We didn't have a whole lot in place at that time, but I think even before I asked for anything, Ernie said, yes, we'll help you. So Trowbridge has been a supporter ever since then. In fact, I think you'd be hard pressed to find any Canadian expat organization around the world that Trowbridge is not supporting, both financially and through activities such as this. Ernie, Trowbridge, thank you for what you do.
Thank you, Alan. Thanks for your website and for all the support that you give to Canadians abroad as well.
Of course. Let's dive right into this. The first question is one that I often wonder every time I come back to Canada. I'm filling out one of those declaration cards, right, where they ask whether or not you have $10,000 or more on your person when you cross the border. So here's the question. I'm coming back to Canada with more than $10,000. I know that I have to declare that money, but will there be any tax implications?
Great question. So I probably get this question more than any other question. I'll be honest, because I think it's because you see the question so often when you enter Canada on that questionnaire and people think about it. So let me explain the context of that question. So the question was never really put there for the purpose of looking at taxation. It's more of a security question. So it's really Canada Border Services saying, are you carrying large sums of currency? And if so, why are you doing so? Are you a bad guy? Well, I don't think bad guys are necessarily going to declare that. But I think by just asking the question, it deters people from wanting to carry large amounts of currency. There's nothing illegal or wrong with carrying large amounts of currency, just that Border Services wants to know why. So as long as you declare it, you have a valid reason for carrying it, there's no issue for you to do so. Technically, that money is not seen as taxable. Cash proceeds are not in and of themselves taxable, or the carrying of cash or bringing cash into Canada. We always look at taxation in terms of where you're a resident when you earn the income that generated the cash. If you're a resident of Canada at the time, if you earned it abroad, then technically that would be taxable in Canada. If you are a non-resident and earned it as a non-resident, then it's not taxable in Canada. You bringing the funds to or from Canada, that does not create a taxable event. Again, really just a matter of declaring it. Definitely is something you could do if you chose to. Now, if it was me, I'd probably rather wire transfer the money to Canada. It might be a little bit safer in case someone on the plane tries to steal it from me, but definitely something you could do if you chose to.
I think you've just helped a lot of people feel very relaxed. Thank you. Here's another question that we received, but I've also seen on some Facebook chats in different organizations around the world. I've been abroad for 10 years. I've heard that if my social insurance number becomes inactive after 5 years, I have to submit information to get it reinstated. Is that true? Does your SIN number become inactive?
Okay, so it depends. So there's generally two types of SIN numbers. There's the type of social insurance number you receive when you're a citizen or born in Canada, that is in essence a SIN that's valid and active throughout your life. The other type is one that's issued when an individual has a work permit. Technically, a SIN doesn't become expired, but what can happen is the SIN can become, I guess we could use the word inactive, once a work permit expires. So let's say, for example, someone has a 5-year work permit, the work permit is no longer valid, then that SIN is still valid, it's just not active. So it would simply be the individual calling or going into a Service Canada office, showing a new work permit or trying to reactivate it. But generally you could use that social insurance number at any time, whether it be to open a bank account or whether it be on a tax return, and the CRA would look into it on their end to see if they could reactivate it, but it never expires. So once you're issued that number, it stays with you forever.
Very good. Question number 3. This is directly from, again, one of our subscribers. If a Canadian has returned to Canada from abroad as a result of COVID-19, but is still employed abroad, are there potential tax consequences here in Canada? So in other words, is there a potential change to their non-resident status here in Canada?
Excellent question. So there's two answers to this question. So the first stems from a concept that we look at in terms of tax residency based on intention. So we ask ourselves, was it the intent of the individual to come to Canada and permanently reside here on a go-forward basis? Likely in this question, or at least in this example that I'm paraphrasing, it probably wasn't the intent of the individual to come back. They were probably asked to leave by their employer, or they felt it was safer to be in Canada, or they wanted to be closer to their friends and family. So that period of time that they're then in Canada, it's arguable that assuming they maintain residential ties to the country that they came from, or they were formerly living in before the virus came, that they're still residents of that country, assuming they kept all of their ties and all of their financial interests, etc., in that country. And really, this limbo period that we're all living in right now, that would be seen as a temporary period of time that they're residing in Canada. And at the end of that, the virus or the end of the lockdown, that's when the person has the opportunity to decide where they're really going to now, on a go-forward basis, be a resident. So assuming that they are still residing abroad and just, I call it visiting here during the lockdown period, then they would still be seen as a non-resident. Under that scenario, the individual would still be taxable in Canada, but only on any income earned in Canada during the period of time that they're here working during the lockdown. So if they're working from home or a family or friend's home during this period of time, then yes, they could have tax issues because they now have to file as a resident, or not as a resident, but potentially as a non-resident on the employment income. Now, another issue that arises is the foreign employer actually now has reporting obligations in Canada from a payroll perspective, as well as a T4 reporting perspective, even though they didn't intend to have those reporting requirements. So that brings about around a corporate issue that they now have to deal with. Now, on the flip side, if let's say the individual was living and working in that other country, and they then said to their employer, look, I really want to return home to my friends and family, I'm going to move permanently back to Canada, and I continue to do my job from Canada working remotely from my home or a friend or family's home. And if the employer says, yes, you can, then that individual would be seen as a tax resident, assuming they've now created all their ties in Canada or they're going to establish ties in Canada, and they would now file as a resident of Canada for tax purposes on a go-forward basis. However, the employer then still does have those reporting and withholding obligations in Canada, T4s, etc. So something that the company might want to investigate further, especially if they now allow all of these employees to go back to their home countries. They might have now created tax issues in various countries from a payroll perspective. So something they should be aware of. And actually, it's a topic I've been dealing with recently with some of our corporate clients that are either relocating employees back to where they were from originally, or bringing them into the countries that they're in because they either got stuck there or they want them to be there during the lockdown period. So there's a whole range of issues that are now going to pop up because of it.
Yeah, it's interesting. There's a whole lot, as you mentioned, a whole lot of issues that are now cropping up that we didn't have before, or maybe we had them kind of a superficial level, but these are becoming serious questions that people have, right? When you have a lot of people that are now considering that digital nomad lifestyle, right? That, and maybe a reverse digital nomad lifestyle where they used to be Canadians living abroad, working for different companies abroad, but now coming back to Canada, but maybe employed abroad. So the next couple of questions are actually related to that. So a Canadian who is normally working abroad as a digital nomad, but has returned home and is now working in Canada, still anticipates going abroad as soon as the crisis is over. Are they subject to Canadian income taxes?
Yes. So I think the answer is that if the individual is performing services in Canada, either from as an employee or a self-employed individual, then they'll now be subject to tax at a minimum on that source income. So not necessarily on their other forms of income, assuming that they're only here temporarily, very similar to the last question, and they're keeping their ties abroad. But in this context, if the person doesn't have any ties abroad and they're normally going from place to place and they're now here in Canada and their normal place of residence doesn't exist because it is where they are at the current time, which is now Canada, then they might be subject to their tax on their global income. So again, there's kind of two answers there. They could be seen as a non-resident or as a resident, but at a minimum, if they are performing services here, then they are going to be subject to tax in Canada on that.
Okay, so the last question. This is for somebody who is moving back to Canada permanently after being away for a while. I have been a digital nomad for 7 years. All payments that I get go to my Canadian bank account as I don't live in any specific country for more than a few months at a time. I haven't submitted a tax return in Canada for years. Now that I'm back in Canada, how much trouble will I be in?
Okay, so that's a good question. So this is a difficult one in the sense that the first thing that the individual should really be concerned about is whether they've triggered consequences in any of those other countries. So, for example, let's say they go to a country that doesn't administer income tax. So let's say they went to the Cayman Islands and they lived in Grand Cayman for a year and they were performing services from there and not paying any tax. That's okay because there is no personal income tax in Cayman. But if they were in a country that does administer income tax, then they really should look to that country to determine whether they have a reporting and tax filing requirement. Now, if they legitimately severed ties with Canada when they departed and went from place to place, it really isn't Canada that's going to look at that period of time because Canada would consider them a non-resident. Now that they move back, they would then be subject to tax on a go-forward basis, even though they technically probably should have been or maybe subject to tax during that 7-year period in some or all of those other countries they were living in. Canada really won't look to that. They want to know, well, where were you a resident during those years? If you weren't a resident of Canada and you didn't have primary or secondary ties here that are significant enough to cause you to be seen as a resident, then they would kind of disregard that period of time as a time that that individual was a non-resident. But if they have now come back to Canada, from that point forward, they would then be subject to tax. Them depositing their pay or let's say payments from their clients, as an example, into the Canadian bank account probably isn't significant from a residential tie perspective. And Canada wouldn't necessarily tax it just because it was received in Canada. It might just have been easier. So for example, I've got a client that lives and works abroad, but the majority of her clients are Canadian clients. So she has a Canadian bank account so that payments can go into that account from her clients because she's invoicing them in Canadian dollars. Nothing wrong with that. Again, we look not to where the payment is received, but where the individual is a resident when they earn that income.
Very interesting. Ernie, thank you so much for joining me today. It's been a real pleasure.
Thank you. Appreciate it. And hopefully this lockdown will be done soon. And so we can all get back to hopefully at least a partially normal life. But I wish you all well and all the Canadians abroad. As questions come up, we're happy to help in any way we can. And I wish you all well during this time. Please stay safe.
Thanks so much. And we've got another call scheduled for next week. We'll do this again then.
Sounds good. Thanks very much, Alan.
Take care. This is an ongoing project. For future videos, please feel free to submit your questions to us and Trowbridge by leaving a comment below. If you've submitted a question that was not answered here, there's probably a reason for that and most likely requires a full consultation. A link to Trowbridge's website is in the description, so please contact them directly. They'd love to assist. Once again, to make sure that you know when we upload a new video, hit the subscribe button and the little bell so that you get notifications. It will benefit the channel and ensure that we're able to continue doing this if you hit the like button. Thanks for watching.